We detected two unusual trades, one of which was worth $3.7 million on First Solar stock, ticker symbol FSLR. And so in this video, we will analyze these unusual option activities to find out if these wealthy investors are bullish and buying First Solar or bearish and selling First Solar, so that we can also make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into the data as usual. As we can see here on the options, time, and sales tape, 3,000 contracts were being traded at about the same time for these January 17 options at the 197.5 strike calls and the February 21st options at the 210 strike calls. And so when we take a deeper look at the option chain for these January 17 options that expire tomorrow, we can see that at the 197.5 strike calls, the 3,000 being traded at the volume today are clearly opening trades, since the open interest is much less at 826. So we know that these are opening trades and not closing trades. And based on our analysis, they were selling these call options to open. And for the February 21st options, we can see here at the 210 strike calls, the 3,000 being traded at the volume also opening trades because the open interest is much less at 1,000. And based on our analysis, they were buying these call options to open. And so when we analyze this trade, we can see here on the risk profile where the x-axis represents the share price of the stock and the y-axis represents the profit loss. Note the break-even point over here. And so when the stock goes down from there, it is a negative loss. And if it goes up, it is more positive gain. But be aware that this trading strategy will be at a loss if it rallies considerably. And so you can see the break-even point over here. And so that is at about $201 per share by January 17th, tomorrow. And so keep that in mind. And we know that this trade is a long bullish trade because we can see here from the Greeks that this is a positive delta trade. So this wealthy investor is going long bullish. Well, how do we know they are wealthy? Well, by selling those call options that expire tomorrow, it actually requires a lot of buying power. Because this call spread here is $12.50 wide, this means that each of these contracts requires $1,250 of buying power, since we need to multiply by 100 to get options prices, since each option represents 100 shares of stock. And since we know that there was 3,000 contracts or trades in total, we multiply that out and we get a trade that required $3.7 million. But keep in mind, this is still a higher risk trade in comparison to the trades that we share on our website. If you want access to lower risk, higher probability of profit trades, make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas that the wealthy investors are trading with a lower risk and a higher chance of profit. Now, how did we trade this? Well, we followed the second trade that required less buying power. As you can see here on the options time and sales tape, we have a second trade here for these February 14th options at the 215 strike calls. And they're paying about $310 each. And so if we take a deeper look at the option chain for these February 14 options, we can see that these are also opening trades at the 215 strike calls, a total of 3,000 contracts being traded at the volume. Open interest is much less at only 66. So these are not closing trades, they are new opening trades. And so you can see our position here as well. POS stands for position, green means buy, where we also bought these for 310 as we had just calculated. And so when we analyze this trade, we can see here that these call options are clearly long bullish as the share price goes up. this trade becomes more positive profitable. And we can confirm it on the Greeks. We have a positive delta trade. But be aware of the risk. We have a very negative theta trade here, negative 14 per contract. And so that is why we use position sizing to manage our risk and simply follow the trade, because we spend most of our time developing option strategies for the higher chance of profit trades that we share on our website. We'll put a link at the top here where you can also gain access to our option strategies and our stop loss if you only trade stocks to reduce risk while increasing profits. Let us know in the comments below. Do you think First Solar stock will go up from here, or will it crash down? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.